Hi everyone. Today let's talk about what Buffett is selling and what does that mean for markets. Then we'll look at all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Buffett sold a ton of stocks in this last quarter, but what does that mean for us as the investor? You can see Berkshire is sitting on $278 billion in cash or cash equivalents, which is obviously a huge number, and that is up 65% from the start of the year. So he's sitting on massive cash, looking for deals, and really what that means overall is that there's just not a lot of deals in markets. There's nowhere where he feels comfortable buying these stocks at current prices. Obviously, they trade a little bit differently than most of us, but look at the trends, continues to trend higher on a percentage basis on how much cash he has on hand. More than 25% of his value is sitting in cash or cash equivalents, and that's definitely concerning. Is that something that you should be doing? Berkshire obviously has an amazing record in terms of returns, but they mention here he has been very early before. He was sitting on a ton of cash in 2005, and the market still continued to rally all the way up until 2008 before the financial crisis. And as a result of that, he did miss a lot of that down move and was able to buy a bunch of stocks at bargain prices during the crisis. So he obviously makes good decisions over the medium term, even if he is a little bit early. It's also worth noting that cash equivalents are returning tons of money right now, sitting at that 5% yield, so able to return a ton of money on that huge cash pile. And then, of course, the biggest name, he sold half his stake in Apple, which has been an amazing performing stock for him. But this could reinforce the view that stock valuations are too expensive to be buying for that long term. We've talked about it a bunch of times before on the channel. If you're not buying for retirement at this point, you really shouldn't be buying. The medium term does not look super great in my opinion. Things are just too expensive, and I wouldn't expect them to yield positive returns over the next 10 years. We've talked about those metrics before. It's not a great time for that medium to long-term buyer unless you're planning to hold for the next 20 to 30 years in my opinion. So overall that means it is a trader's market, and this is something to consider. Looking at fear and greed, we finished the week at a 53 up from a 35, so substantially bullish week. On the metric here, you can see even the Thursday to Friday, 47 to 53. Surprising considering how little of a move we did see. Finished the week on the high. Strength, fear, still not moving with markets. Breadth continues to move higher here. We'll take a look at that later. And then put call ratio back into greed all the way down into 0.69. Pretty low level there. You can see 0.68, 0.69, right in that range is where you typically see short-term bottoms on that ratio, meaning short-term tops. And then volatility still neutralized, still sitting pretty much right on top of that 50 EMA. And then safe haven demand sitting at neutral. So bonds have moved a little bit more towards that normalized condition, and then junk bonds have not moved at all. Still extreme fear. People are still buying these up like crazy, which makes sense. As yields are set to come lower, these become more and more attractive. Moving over to the AAII survey, massive number on the bull indicator here. Again, that is a contrarian metric for me. You can see we are almost at that 1-year high, super high level. You very rarely ever see it in the 50s, and that tends to be the top of markets. You can see 52.9 is the high, and we are just 1% off of that. So bulls squeezing to the upside, neutral getting squeezed here in the middle, and then bears basically at that 1-year low. You can see 25.2. That was a very low number. Anything in this 20-ish range is a low metric. And again, for me, this is contrarian. This tells me there are too many bulls in the market and that we should be seeing a turnaround fairly soon. Moving over to seasonality here, you can see to finish out the month, typically 27 to the 29th, pretty bullish period in there. So we'll see if that comes to fruition. Right now, not super bullish. 26th, basically flat. On election year is slightly bearish here. So we'll see if that continues. And then, like I mentioned, 2 days after that, pretty bullish. Really across all of the major markets. S&Ps, not so much. Dow, not so much. But everything else, pretty bullish. And on those non-election years, everything is bullish until the last 2 days, which is basically flat. So seasonality says we should be slightly bullish, but I'm not so sure that fits with my overall thesis. And then looking at the calendar here, bullish Monday, like I mentioned, bullish Monday, durable goods, And then for Tuesday, basically nothing. Consumer confidence. Bullish Wednesday, third trading day from the last day of August, up 20 of the last 21. So that's a very bullish indicator there. Next to last, down 18 of the last 28. So a little bit more bearish there on the GDP revision day. And then the last day of the week, there's nothing, but there is a little bit of data. Chicago PMI, Michigan data, as well as PCE. Moving over to the economic calendar, like I said, durable goods, GDP for the Atlanta Fed also on Monday. And then Tuesday, consumer confidence, nothing crazy. Expected to be basically flat from the previous read. 2-year note auction, that'll be interesting. See how much that comes in under the previous read. Wednesday, crude oil inventories, Fed Bostic. 5-year note auction, basically nothing. And then for Thursday, this is the big one, GDP numbers for the week. Pending home sales, fairly interesting, 7-year note auction. And then initial jobless claims, that seems to have calmed down a little bit. But GDP numbers, definitely going to be interesting there. And then for the Friday, we do get CPI for the Eurozone. That'll probably be at expectations. Unemployment rate for the Eurozone also there. And then like I mentioned, PCE, that's also going to be important. Pretty sure the rate cut for September is locked in at this point, but maybe if we saw something crazy here, that could be interesting. I don't think that's going to happen. I think inflation is pretty much going to come back down as expected. And then Michigan data here to finish out the week for economic data. Moving over to Max Pain here, you can see stock price 562, Max Pain 545, so much lower. Puts quite a few of those in the market at 3.38, so maybe you don't expect too much of a fall here. Put wall at 540, but these put walls at 545 and 550 are pretty low, and then there's a call wall there at 557, and we are already above that. So maybe we see a little bit of a fall towards that 550 area. That would be interesting. And total options, pretty substantial for a non-expiration week, so 1.59, almost 1.6 million. And then again, looking at that calendar, you can see how that drifts 545, 546, maybe even all the way up to that 549, 550 area, but we're definitely very high at that 560 area in my opinion. Moving over to the charts, starting off with the S&Ps here, you can see 2 weeks in a row, still trending towards bullish, but we are right at that SMA here. So this is the zone where you would expect to find rejection. That's at a 68.42 and RSI is sitting at 68.3. So rejection zone, absolutely. Is it going to trend a little higher? Maybe, but I do expect a triple divergence here. So you have a high, lower high, lower high, and you can see on the charts, you have that one high, second high with a lower RSI, and then a third high. Still potentially possible, but I would still expect a lower RSI read, so a triple divergence, and then we'll see what happens after that. We're also at this major trend resistance, technically overthrew it just by a little bit. Trend for next week is going to be 56.38. And then moving over to the daily chart here, you can see that short-term trend, super important. 4 days in a row at that level, almost 5 days. Momentum stepping towards bearish for 2 days in a row on a closing basis. So seems like this is going to roll. Daily chart showing weakness, absolutely. While the weekly chart looks a little bit more bullish, in my opinion. And looking at the levels here, you got 560.07, 565.16, and you can see we could not eclipse that high from the Thursday session at the end of the Friday session. Still looks strong into the end of the day, and it's not impossible we could see a touch of that 565 level. But again, you can see clear divergence, higher RSI read, same price action, lower RSI read, even on the hourly chart. So something to consider there. Moving over to the Tasty charts here, you can see we're at that second ATR band, almost to the penny, 562.36, and we're at 562.13, so just about 20 cents below it. And you can see upper ATR band, that's where we found resistance the last 2 times. That would be sitting at 576.70, so it's not impossible that we see another $13 or so of upside. That would be another 2.5% or so. Weekly chart still in bullish conditions, but if this were to stop and turn around here at that second ATR band and not touch the top one, that would absolutely be a very bearish indicator. Usually that means some kind of change in structure is going to be coming. You can see it here where you hit that upper ATR band, pull back, rally up to that second ATR band, and then pull back. And then you did get another follow through almost to that lowest ATR band there. So that's a big indicator. When you do not hit that upper ATR band on bull rallies, usually means you're starting to lose momentum and strength. And then looking at it on the hour, and then looking at the daily chart here, you can see second ATR band continues to be a factor. That's at 561.51 here on the Tasty charts, and that upper ATR 570.75. So basically in that same region, that would just barely eclipse that all-time high. That would give us about another $8 of upside. So so 1.5%. Momentum on the MACD is still bullish on the volume weighted MACD. So again, that means we could continue to kind of hover, maybe grind a little bit higher. This massive rally seems to be done in the short term, 5 days in a row of very slightly bullish over that time period with a very big bearish day on the Thursday session, but we'll see how it plays. You could argue for bullish conditions, and you can see the ATR trailing stop is sitting down at 537.91. So still bullish conditions on the daily chart. Moving over to the NASDAQ, much worse of a picture. You can see we are nowhere near that all-time high. That is all the way up at 20,690 and current price is 19,720. So almost a full 1,000 points below that all-time high, even with the 3 weeks of rally. And again, you can see that momentum definitely slowing. We had 2 very powerful weeks, wide-ranging candle bars, and then here we got a 1% week, which is still fine. But you can see we rejected off that trend line there at 19,917 and sitting now at 19,720. We are above all the EMAs and SMAs, momentum rolling the same here, RSI a little bit of room, but you can see just how much lower that RSI is. Bottomed out right around the 50 line, so that still indicates bull trend. But if we reject here and then we dip below that 50 line, honestly, that says to me we're going to see some change in structure. And then looking at that daily chart, you can see gap up, doji, inside week, momentum again, 2 days in the row, bearish trend, momentum, RSI still bullish there, hanging out above the SMA. So this could continue to grind a little bit. You can see how this kind of flows. SMA trends lower, bottoms out, gets back above the SMA. You get a grinding price action here. And then once we did crack that, you see that downtrend. So right now, still pretty bullish on that trend on RSI. But again, major trend resistance on the daily chart. Marks a low back here in April. Again here in May. Marks this top before that huge drop that we had. Touched that level 2 days in a row and rejected. And now we are here once again. Powerful trend line, retesting that. And if it rejects, that's absolutely going to be bearish. And honestly, that Thursday candle is still stuck in my mind as a major rejection and a change in trend style candle. You can see it here. Rally up, touch the trend, big down candle. Slight retracement, but then you end up getting that follow through. So maybe you get the same here, 2 more days of consolidation, and then you get one of those major sell-offs over the coming days. And then moving over to the Tasty charts here, you can see we're at that first ATR band. It seems like we're trending towards that second one, but again, like you saw, we're hitting that major resistance in here. So if it continues to push through that level, your next price target would be 495.56, which could be about $15 higher from here, 3.5% or so. And then if that broke, your next would be the all-time high around 504. Your ATR above that on the weekly chart is all the way up at 513.64. I think it's wishful thinking to say we're going to get anywhere near that considering what we're seeing on the SPY already, but it's not impossible, something to consider. Markets can do all kinds of crazy things, but looking at the daily chart here, this tells a much different story. You can see downtrend here, bearish conditions on that ATR trailing stop. That is still sitting at 484.32. We've tested that 2 days in a row, rejected from there after we truly tested it really on that Thursday session. Tried to rally up to that zone, couldn't do it, gave it all back and dojied. So still looking for like a day or two of consolidation here before this starts to roll. Very similar to this. Big down candle, 3 days consolidation, big down move, big rally, big down candle, 1 day, 1 more or 2 more days, and then we'll see it roll. So we'll see how it plays. You can also see a little bit of volume coming through on the R vol here on that down candle. So that's also concerning. That generally tells you that there's going to be a little bit more down move here. And that would be your trailing stop. If you're trying to get short, not a terrible trade here, just about 1% off of your off of the stop, looking for that down move. And then in the short term, if we actually do get that down move, it would not shock me to get a move at least into the 461 area. That would be your 55 EMA here. And then below that, if it were to break 449.54, and then that lowest ATR band, which is really the point of concern, is all the way down in that 429.28 area. That is a huge move down from here. That's about 50 points lower, more than 10% lower. And that would also bring you in line with this previous bottom. And if this substantiates as a high, lower high setup, then you would expect a lower low, which would have to take you below this previous low of 424.27. So who knows how low we're going to go after that if this structure truly changes. Moving over to the Russell here on the weekly chart, 2 very powerful weeks, and we got another catalyst with that first rate cut coming. Jerome Powell at Jackson Hole said he is going to favor it, which means it's basically going to happen in my opinion. Broke this trend line here at the close, 221.41 is the next level. And then if that zone breaks, it's probably headed back up to this trend around 228.80. We talked about this really powerful run here. I didn't think we would fully round trip that move all the way back down to the 200. I thought we would get a higher low setup, maybe around the 21, but that didn't happen. Pulled all the way back, but we are going to go back up to this, in my opinion. Momentum bullish, RSI bullish. I would love to see RSI get back to that level and eclipse it. Don't want to see that divergence. That means we're probably going to see some more down moves if we get that divergence. But look at it here on the daily chart. Looks a lot better. Huge candle on the Friday after those Jackson Hole comments. Momentum still very bullish. RSI, plenty of room to that overbought condition. Sitting at a 60.24 all the way, which means you got a couple of days to that 70 mark, in my opinion. Huge volume there as well. 40 million shares traded, more than double the 2 previous days. So strong volume, strong push, broke multiple levels. I think this has more in the tank, in my opinion. Russell looks very good. And then looking at the Tasty charts, similar thesis here. First ATR band sitting at 223.03, which again gives you about 1.5% of upside there. And that upper ATR band, that's where you would expect to touch if this is truly going to continue to that next resistance, which would be at 232.56. So another $13 higher potentially on the Russell over the next week or two. Again, I really like the Russell. I think it has a big catalyst. I think there's buyers here looking at the underperformance of small caps over the medium term and really over the long term here, since we've seen tech take the lead, pushing up the NASDAQ and the SPY. So Russell coming into its own, I think there's the most opportunity there, and this continues to look very good. Moving over to the Dow, you can see 2 solid weeks in a row right at this trend resistance. Honestly, this looks pretty good. The Dow got a jump on Jackson Hole news, just like the Russell. Everything that's not tech is seeming to do quite well. That's why the NASDAQ is still not performing that well. That's why the NASDAQ is not doing so well. The SPY has enough other stuff in it that it's doing okay, but the Russell and the Dow seem to be the outperformers. This is probably going to push up to that next trend line. For next week resistance, that would be around 416.94. Still has this trend line to get through next week. That would be around 413, but momentum bullish, RSI bullish. Not the same kind of divergence here. I think this is probably going to go. And on a closing basis, this is an all-time high for the Dow. So pretty good. Still has some wicks to get through, but I still like it. Moving over to the equal weighted S&Ps, again, all-time high close. So everything that is not tech and has enough other stuff in it is continuing to do quite well. Momentum bullish, RSI bullish. Again, breaking that divergence. So we have a higher high and a higher high on RSI. So everything looks good. This is a new all-time high, which was at 174.52. Obviously a record close as well. Probably need to take a closer look at this. Kind of like that, maybe try to give it some structure. The structure is pretty hard to look at, honestly, right now. We're in price discovery, so maybe this is a zone to look at. We could also throw another one right at that wick high, so that would give you a little bit more room, potentially up into the 178 area if this were to break. It's kind of hard to say. Maybe it's more like that, where this is a center line and then this is your wick highs. That would give you a breakout here, potentially again 178.50 makes sense. Not a super clean structure, but at least it's something. Moving over to the ratios, SPY Russell, NASDAQ SPY. As I said before, the Russell is doing the best here. So the Russell crushing the SPY, and also a bearish week here for the NASDAQ SPY. So SPY outperformed the NASDAQ and Russell outperformed the SPY. So SPY is in the best position here, and this is trending lower again, bearish momentum. This is probably headed much, much lower. Russell seems like the place to be. Let's go ahead and extend out that trend line here. Maybe you find a little bit of support in there, but honestly, I don't like it that much. I think this is going to be a lower high setup. I think the NASDAQ is going to continue to underperform the SPY, and I think the Russell is going to continue to outperform the SPY as well. So Russell, still the place to be based on these ratio trends. And then looking at the SPY divided by the M2 money supply, M2 actually expanded a little bit here. We looked at the Fed balance sheet, which got a little bit bigger over the last week, which is interesting. Momentum on the weekly chart continues to trend higher, just like we saw on the regular SPY, but look at RSI here. So we're above the SMA just barely. Maybe that says we're headed a little bit higher. We're going to get a little bit higher here. Maybe hit that 27.25 level. That would be interesting. Honestly, I thought we were going to touch it here, but we didn't quite make it. Then we pulled back 4 weeks in a row of down move. Now we're here again. Is this going to be a double top? Seems like we're within striking range of that. If this double tops, that's going to give you a lot of room here back to the midpoint, which is that 24.49 area. And then usually you stack another consistent move from here. So that would be 2.5 points. And then if you got another 2.5 points here, that would take you all the way back down to that 22 range, which would be that very important level. Remember, 22.5 is super important. That marked the all-time highs in November when we were there. And then this most recent high in July of 23 before we pulled back. And then we had this super super aggressive rally on AI news and all of that. And now it seems like we've kind of topped out, at least in the short term, and that could give you a lot of down move into that zone. So something to consider, something I am definitely watching here. And honestly, even if we hit that 27.25 level and then pulled back, I'd be looking for a very similar move. So something to watch for. Divergence still forming, lower RSI read, same price action, and it doesn't look super great in my opinion. Moving over to the Mag 7, you can see we did get an up week, 0.61, but nothing crazy. Again, you have trend resistance here. We were in this structure for a very long time. Honestly, you can see this one goes all the way back here to the lows in January of 23, marks a similar low in October, marks a similar low again here in April of 24, tested those levels and then rallied up. But we have this shorter term, and now you can see we're actually retesting that trend line here, which makes sense. Got to break down. 5 weeks in a row, rally up, retest, and then that is usually where you start to see that change in structure. So momentum still looks okay. RSI is below the SMA, so that's not great. And if this rejects from here, again, I know I've been saying it very consistently, but we have a similar structure across a lot of different charts here, retesting some zones after the breakdown. And if this is a lower high here, that would be the first lower high we've seen in a very long time. And just looking at this on the macro, you can see we are definitely running out of strength and momentum here. And at the very least, you would expect sideways consolidation, if not a pullback. And then actually looking at the volume zones, you can see if this volume zone breaks here around 240, then we're headed back towards that 197 area, which actually puts you right in range of these previous trend lines. Go ahead and extend that out here. That trend support would be sitting around the 192 to 195 area. By the time you get to it, maybe it takes a little bit longer, 198, somewhere in there, right in that same zone with that highly traded zone and this consolidation back here from September, October of last year. Moving over to individual stocks, looking at Apple and Microsoft here. Apple slightly positive, but again, you still have what looks like a lower high setup. Momentum has not swung back to bullish on the weekly chart yet. Still has not touched that 230 level after breaking 224 2 weeks ago and then holding it this week. Momentum seems to be fading. 230.23 would be that next level if we did get a continuation. But if we were to reject from here, I would treat this kind of as a doji up candle, doji down candle, and that would be a confirmation down. So we'll see how it plays. Overall, Apple still a bullish structure, and you can see consistently higher lows and higher highs. Still looks okay in terms of structure, but watching this one closely here this week, maybe even the week after. But Microsoft, very different thesis. You can see consolidation, tried to break out, gave it all back into this consolidation. This looks like distribution to me, which is not great. Usually that means the rally is done, big topping process. And if this kind of neckline at 394.22 breaks, you can see multiple tests here in April, tested it again this month with that big down candle, 55 EMA waiting for this consolidation. If this starts to trend lower, we're going to be in tough shape in my opinion, but we'll see how it plays. Momentum actually did step slightly towards bullish there, which is interesting on the weekly chart, but looking at it on the daily, it looks significantly worse. You can see that up move was actually quite feeble in Microsoft, big down candle Thursday, momentum stepping to bearish, didn't recoup most of those losses. 21 EMA held in there at 414.32, but if this zone breaks here, super critical, 200 SMA sitting at 409.44, then there's going to be a lot of room here back into that 394.22 area. Moving over to Tesla and NVIDIA here, looking at Tesla first, you can see that huge move up that we got. This was on that robo-taxi news. You had a consolidation, fake breakout here, consolidation, rally. Now we pulled back, higher low setup, rallied up again, kind of looking at this like a flag setup. Again, not super clean on the setup, but if it breaks out, there could be room back to these previous highs. I think Tesla is going to benefit from rates coming down. Financing is a big part of their business. People buying super expensive cars typically finance part of them, so that could be a little bit of a motivator, a little bit of a driver here for Tesla to the upside. I still like the structure as a low, higher low setup, especially if you're looking at this low, higher low setup here and trying to give this just a little bit of structure here. Maybe this is starting to be a trend. This is kind of that first test. Maybe you could argue here and then here is a first test. And if this continues to rally up, there's a lot of room to that upside. If we were to get that continuation, let's go ahead and extend out that trend line here. That would take you all the way up into the 277 area. Tesla still looks pretty good in my opinion. And then looking at NVIDIA, very different story here as well. You can see this very long trend that we've been in here. We got a breakdown of that trend and then did recoup some of those losses. And then we're waiting to see, is this going to be a lower high? Is this consolidation? Hard to say. Momentum still bullish. RSI, not so much. Let's look at this on the daily chart for a moment. Similarly to everything else, consolidation for 5 days, can't seem to get above this zone, even though we broke 124.69. Maybe we need to put an intermediate level here around 131. I went ahead and put an intermediate level there at 130.35. That is the open from the 9 July candle. Seems to be an important zone, seems to be this next resistance. If we can get above that, 140.76 is in play, but right now this is kind of where we're stuck, between 124.69 and that 130.35 level. Momentum still moving to bearish. RSI looks a little bit better. Moving over to Amazon here and Google, you can see Amazon kind of in this downward structure. We added this trend line this week, marks the top here on 8 July candle. Again here, not 29 July candle. And then here, touch that trend, rejected from here. It was basically flat, down 0.01. Momentum says it's okay. RSI still trending lower, even considering where we were back here at the same price action at the end of May. Same price, lower RSI read. So doesn't look super great. Amazon seems to be broken in this uptrend that we were in. Now it looks weak. If it rejects from here, that's obviously going to be quite bad. And I would expect to pull back at least to that 55 EMA at 162.64. Does it do it all in 1 week? Maybe, maybe not, but definitely doesn't look great. And then similarly here with Alphabet, we are still watching this as a down move. Bear flag continues to hover in that bear flag. Momentum still bearish. RSI still bearish. If this structurally breaks, that's going to be a lot of downside potential. This move from top to bottom was about 17%, and waiting to see what happens here. If we get a breakdown, 17% lower would take us back to that highly traded zone in the 143.82 area. Let's go ahead and expand that out. 143.82 would be back down here almost to fill that gap. Maybe that's where we're headed. The high from that candle on a closing basis was 142.17. If this pulls back and gets the gap fill again, that is a lot of room to the downside, about 15% lower. So something to watch there on Google. Doesn't look super great. Moving over to staples and discretionaries. Remember, staples got this very powerful breakout. Two very strong up candles, 1.65%, new all-time high close, new all-time wick high. Price discovery, who knows where it's going. Staples still looks very good. It is overbought. Momentum still very strong. Again, everything that's not tech seems to be doing quite well, and this is no exception. And then similarly here on discretionaries, I thought we might find some rejection here. Didn't do it. Momentum swung to bullish. RSI swinging to bullish. Again, RSI, clear divergence. We're getting very close to these previous highs with a lower RSI read, so that's not super great. But in terms of price action, which is king, got a clean breakout here at 185.36. Next level, 189.38. If it breaks that level, this most recent high is in play at 193.81. And then let's go ahead and extend out some of these trend lines just to see maybe if we were to get into that zone, that would be all the way up in the 199 to 200 zone over the next couple of weeks. Not impossible. Remember, there's a lot of things that are not tech in discretionaries, so seems like anything not tech is doing good. Moving over to oil and gas and financials. Oil and gas was actually slightly negative on the week, 0.12, but it is coming off of this low. Resistance 140.88, tested that this week, rejected from there slightly, but I want to look at it on the daily chart. It actually looks pretty good here. So you got the big move down, rejected from the 21, pulled back, held a higher low. Big up move on Friday, momentum bullish, RSI bullish. I think this is going to have a pretty decent swing here. Still looking for this gap fill back from the 1 August candle. The closing price on that candle is 142, so that gives you about another $3 of up move. I think this is going to have a decent move here on this week. Something to watch there, oil and gas stocks. And then financials continue this massive run. It's been in this up move, rejected pretty powerfully with everything else, but momentum back to bullish, RSI back to bullish, momentum, price action, new all-time high close, broke this trend. This is going to have an up move with yields coming down. Makes sense to me. Again, it's not tech, so it seems to be doing quite well. Moving over to wood and gold. Wood had a very strong week, 4.52. It's right at this resistance here. I had to add some trend lines. I was really watching this one here, and now you can see we broke that. We did have a previous break, and now we're right at that trend line. Same slope on all of these. If this breaks out, and this is a bull flag, like it kind of looks like it is, rally up into this zone, bull flag. If this breaks out here, I think there's going to be some room to the upside. Seems like 89.90 would be in play. really need to add some levels to this chart, but 89.90 would be where I'm looking. That's this kind of high before this bigger move down. So wood seems to be in play. And then looking at gold, basically flat, positive 0.01. But in that lower interest rate environment, I think gold is going to continue to do well as yields continue to come down. So something to watch. Gold still looks very good. And don't forget, my medium term price target is up in the 250 area. Let's go ahead and add a level there just to keep track of it. Obviously, that is based on fundamentals, not based on technicals. This is price discovery, so who knows where it's going. I just think this is going to have a pretty powerful move, and I don't think 250 is out of play. Moving over to RIOT and Marathon, both of these had a strong week. I think they can continue to have strong weeks over the next few weeks or so. We got a step towards bullish momentum on both of these. RSIs have a little bit of room for improvement. Still need to get above the SMA here, but powerful weeks, 6.38 and 15% respectively. If Mara can get back above 1878, I think there's a ton of upside potential here. These wick highs are usually around that 25 to 28 area, which would be another $10 up from here. Absolutely massive move if we were to see that. It's definitely not uncharacteristic for this stock. That'd be about another 42.5% of upside potential. Mara seems to be in an upswing. Not a long-term trade, but something for the short term, 1 or 2 weeks. I would expect to see that move. Mara can do it in 1 week. You can see multiple weeks of 46% here, 31% here. Not impossible to happen all in 1 week, and I think both of these actually look pretty good, especially on the back of those Jackson Hole comments. Similarly to gold, digital currencies tend to do worse in higher interest rate environments. Moving over to breadth, 20 and 50-day breadth. Big up candles on both of these. Looking at 20-day first, look at the level we're at here at an 89.46. These are super critical levels. You can see over the past 4 years or so, we very rarely get above this level. So we are super bullish, something to consider. Typically, these are turning points. You can see all of these areas every time we get here. We do pull back. The question is how much of a pullback and how long does it take? There are many iterations, just like this one back here in 2023, where you get here 1, 2, 3, 4, 5, 6, 7 weeks in this same zone before we saw the pullback. So can absolutely get here, stay here for a long time. Sometimes you don't. Sometimes you see these kind of up moves where you get one candle into this zone, down candle, slight consolidation, bigger down move. Similarly back here, consolidation for 6 weeks, then a bigger down move. But understand we are at those very overbought conditions on 20-day breadth. Doesn't really go much higher than this. You can see you have to go all the way back here to April of 2020. And that's where we got this 98.79 read. And then of course 1, 2, 3 weeks in the zone, and then we got the pullback. So something to consider. 20-day breadth saying that we are in a zone where you typically see pullbacks. Doesn't mean it's happening right away, but there's probably not too much more upside to go. And then similarly here on 50-day breadth, and then 50-day breadth, very different thesis. This is consistently lower highs. High, lower high, lower high, and we're right in that trend line again. We'll see if it rejects from here or not. Momentum still looks okay. RSI still looks okay. Not overbought by any means, could absolutely go higher. And that fits with the 20-day kind of hovering here for a couple of weeks. Allow the 50-day to get into this overbought condition, and then we'll see what happens after that. So 50-day could go higher, but understand 20-day, super critical level, doesn't go much higher than it is right now. Moving over to 200-day breadth, you can see another positive week. Momentum continues to swing to bullish here. RSI continuing to give lower highs, but it is back above the SMA. So this continues to trend down slowly, waiting to see if this is another lower high. We've had them consistently. Let's go ahead and add a trend there. You can see perfect trend, high, lower high, lower high. And we're right there once again, waiting to see what happens. If it rejects from here, probably going lower. This last one tested the 200, which was a lower low. And if this breaks down again, we're probably headed down into that 50 area, 54.69 to 58.90. We'll see what happens. Critical zone here, again, seems to be a very slow downtrend. Let's go ahead and see if we can structure that here as well. Not super clean, but does kind of fit with that thesis, which would give your price target somewhere around that 61.48 area. Moving over to the dollar cratered once again, 1.68% on the week, absolutely massive. 200 sitting there at 100.3, seems like it's going to touch it. Just a few tenths off of it now. We are oversold, we're at a 28.27, but again, as this this continues to fall here, equities are getting propped up, so you do have to factor that in. But the dollar looks super weak. Maybe it finds a short-term bounce here at the 200. Maybe it hits the trend at 99.95, something in that area. That would also take you back to these lows from July. So we'll see how it plays. The dollar still looks quite terrible, still very much trending lower every single week. But eventually that will stop, especially once we get a little bit clearer message from the FOMC after this first cut. So dollar still looks bad, still can continue to go lower, which is propping up equities, at least in the short term. But once it bottoms out, I think equities are going to take that bigger move down. Moving over to bonds, looking at J&K, this is the first time we've really had to zoom out here on J&K to see where we might be going. You can see that 97.69 level is the high back here from the August of 22 rally. Huge move to that zone, huge move down. Obviously, that was the market at the time. But now we're rallying back into that zone, so this was a good accumulation. You can also see accumulation here, retested that zone, clean breakout, and it seems like we're headed to that next area, 200 sitting there at 98.55. People are buying up these bonds as yields are still pretty good. Yields are going to come down for sure now based on the Jackson Hole news. And then similarly here with TLT, we're getting back to these highs from December. We're going to get there 100.05 right there in that zone. And then we'll see what happens after that. TLT not as bullish, but I do think it's going to get to that 144 EMA, which is sitting all the way up at 106.22 eventually. This is going to continue to downtrend over the coming weeks, and I think TLT is going to continue to trend up to meet it. Probably get an initial rejection, but I do think it's going to go higher eventually. And I think TLT is pretty much bottomed now, especially with the news that yields are going to go lower over the medium term. Obviously, TLT is very long dated at 20 plus years, but overall, I think this is going to be a good accumulation for the medium to long term. Moving over to the VIX, you can see we got that massive spike here, and then we've had 2 subsequent down weeks, but we are still hovering at the 21 EMA, still hovering at that 1470 level. So I still think this is going to be a higher low setup. I still think this is going to push back up into that 20 to 22 area. And then we'll see what happens after that. Is this going to be one of those kind of growing trends over time where we get big moves up, big moves down, but each subsequent is a little bit higher? This was the 21 to 22 period, so that was a substantial down move during that year. Is it going to be that? I'm not sure, but right now it seems like a higher low setup. It seems like this is going to push higher, which again fits with that pullback thesis. That seems to make sense across a lot of different markets. Moving over to my accounts, you can see I finished at 130, 128, made some money on the week, not as much as I could have, but still pretty decent. And then in terms of positions here, 220 is the stock price for the IWM, 216 is the covered call, $4 credit, so we're basically at that max profit. Probably going to roll this up and out again. I still think the Russell has a lot of room to the upside. And then looking at the Qs, much more conservative here. I have a 174 call for $13 credit, so deep in the money, watching for that down move. And then I have a longer dated call here at 492. You can see that's sitting in a small loss, but nothing crazy. I do think we're going to get that bigger down move. Whether it happens next week or the following weeks, we'll see, but it is at an area of major resistance, and I want to be protected from that. You can see the deltas here, 1.6 on the deltas, so expecting sideways choppy markets, and similarly here, but for the Russell, more deltas and probably going to get into a more bullish position depending on what we start to see on that Monday and Tuesday sessions. Let me know down in the comments section what you think about Berkshire Hathaway's cash pile. Is that something that we should be doing? Should we be getting into cash and cash equivalents, selling some of our stocks, potentially taking some gains, or should we just continue to blindly buy at these very high prices? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.